Hello, everybody. This is Mr. Lu. A very good day to all of you. The stock market has been hitting an all-time high again and again and again. So today's video, I want to share everybody what you need to be careful about in this kind of bull run. So if you like this kind of video, please remember to give a like and subscribe and join us in our 1M65 Telegram channel under Lu 1M65. With this, let's get on with our video. So the usual disclaimers, you can read by yourself. And let's get on with the exciting part of the video. So the S&P 500, since the bottom that we have seen in 2022, and it has rallied all the way up by 40% to date, 40%. Some of y'all has fire shots with me somewhere around the 3,800 points. Some of you have caught the bottom. Some of y'all have caught it slightly higher. It doesn't matter, because if you're caught somewhere around the bottom, you have rallied 30%, and that's a phenomenal return. So if you look at the NASDAQ, okay, which is a ticker tape QQQ, you could actually experience a far more incredible rally. So from the bottom, it has rallied up by close to 67%. So many of you are sitting on huge profit. Congratulations, right? Now, for those who haven't, it doesn't matter, because with this, you learn, and because there will be a next crash that will come. I don't know when, but for sure it will come. But when it comes this time around, you're smarter, you're wiser, you can take advantage of it much better. Now, let's go back and look back at history just over the last 2 years to revisit this crash and this bull run. How did it come about? So the stock market crash at that point in time was caused by the rise in inflation, and the Federal Reserve increased interest rate phenomenally and very quickly, and that caused the entire stock market to crash. So, but since then, the inflation has been beaten and has now dropped down to a very comfortable level, that the Federal Reserve has started to signal that we're done with increasing. We might even be decreasing in 2024. This sent the whole stock market in a phenomenal rally that we're seeing right now. So we have seen the S&P 500 now about 40% rise and the NASDAQ 67%. But in this whole rise so far, we already experienced what we call a retracement of the S&P 500 and the NASDAQ. And these things are very common. Let's take a look at the picture itself. So this is the S&P 500 that we have seen in 2022. There was a fall, and then there was a reverse. Now, incidentally, for some of you whom you all recall, somewhere around July, I start telling everybody all the price levels are starting to stabilize. We will see the inflation rate taper off, right? Very few people actually believe me then. It doesn't matter. Now looking back history, has proven that I'm right. It doesn't matter, because we could have another situation that happen in future. So the bull run right now has taken place, and in 2023, somewhere around July, there was another retracement, right? We call it a correction of around 11%. So these kind of bull run retracements are very common, right? We see that also in the NASDAQ. The NASDAQ has a far steeper rise and a more rapid rise, but in the same breath, they also have a retracement around the same period as the S&P 500 of about 12%. Since then, of course, it has recovered and gained from strength to strength. So this is the NASDAQ and S&P 500 that we're experiencing. This whole episode that we're seeing right now is actually a repeat, almost in entirety, of what we have seen in the 1980s Paul Volcker's bear. So I've talked about this Volcker's bear again and again and again. In fact, I said it even before the whole stock market rallied, that we're going to see a repeat of the same situation. So in Volcker's bear, the history was that Paul Volcker actually spiked the interest rate to fight a very painful inflation, and that drove the entire stock market down into a terrible crash, and by the way, also caused a recession. But when the inflation rate start to taper down and people see that victory is in sight, the whole stock market rallied, right? It rallied so fast. In fact, in 2 to 3 months, the stock market recovered from the crash of 140 all the way down to about 100-ish, and it retraced back. No, sorry, it recovered back, to about 140 within about 2 months. But it did not stop there. It went up, gaining strength after strength after strength, like what we are seeing right now. So what we're experiencing today is what we have seen in 1980s. Now the good news is that the stock market actually did not stop when they recovered the 140. It went all the way up to 170 before they experienced another retracement again. But in between this spike, you actually see small little volatility, 3 to 5% on average, okay? And that's very normal. But the retracement that we're seeing in 1983, somewhere around August period or so, went down by almost a year, almost a year. I would say about 10 months or so. And that period of retracement was about 12%. Many of the investors, I'm sure at that point in time, will be crying out, see, I told you that this is a fake rally. Okay, this is a bear trap. But you know what? After this retracement came a continuation of the entire bull run. In fact, it went all the way up to 1987 before we have another crash again. So this bull run was a very long bull run. Could we see this bull run again in the current bull run that we're seeing right now? Possible. In fact, likelihood is high, right? Well, we'll never know because history may not repeat by itself in a full entirety. But this is a good experience that we can look back upon. Retracement of 10%-ish or so is quite common. We see that in the year 2020, where the COVID crash was then accompanied by a post-COVID crash recovery when the Federal Reserve started doing what we call quantitative easing. The crash went down by as much as 10%, as much as about 30%, but it quickly rebounded. But it rebounded and followed by some retracement of 10%. And then it goes up, come down, goes up, come down, goes up, come down, each about 3 to 5% or so, right? So it's very common to see retracement of this kind of volatility, and we should expect that to happen. The same thing happened in 2004. There was a retracement of 8.3%, and that lasted for a period of about half a year or so. So retracement, number one, can go around 10% or so, and can last any time between 1 or 2 months. It may even last up to a year. So do not be shocked or surprised when retracement would happen and you felt like this is the time that the end of the world is coming. This time is different. We're gonna bail out, right? So I cannot tell you what you should do, but when I see this kind of experience happen again, I will look back in this kind of history period and just say, hey, it's just a repeat of history. No big deal, right? So we'll be careful not to fall into this kind of trap of being frightened by this kind of volatility. Now, someone might say, hey, Mr. Lu, how bad can it go, right? How bad can it go? Well, in 2010, the bull run retracement actually went down as high as 17%. That's almost a full correction that we're seeing in the stock market crash of recent times. So it's not uncommon, right? It's not uncommon because the world will be filled with a lot of incidents, cases, and events of all sorts, and they can always cause all this volatility. But take heed that the S&P 500, the NASDAQ has a very long history of robustness and continue to climb up in a very strong way. So what's the conclusion? Well, the conclusion is that the stock market is likely going to go up, but you will see retracement. Retracement are very common. It's part and parcel of bull markets. And if you're unable to if you're unable to withstand it, one thing is you might want to consider do what Mr. Lu do. Don't look at it. Go and live your life, right? Go for your exercise. Go and live your life. Take care of children. Take care of careers and all this. And what you really need is grit. What you really need is holding power. What you really need is what I call tahan ability, right? So if you can tahan all this kind of thing, you will do well in life, okay? Especially in the stock market. So with this, I hope you like the video, and I hope that you will give a like, and I'll see you in a day or two, okay? Thank you, and may you do well in your financial investments and your wealth.